a 5-bedroom home. He is planning on expanding that to either a 8 or 10 bedrooms. In this scenario, will their initial policy when they purchase the 5-bedroom home cover them, one, during the renovation period, two, when they are done expanding it to the 8 or the 10 bedrooms? Thank you for joining us again. You are on Wealth, Legacy, and Property, where we talk about leveraging real estate to build wealth and also leave a lasting legacy. I'm here again with Brent. We are going to talk more about home insurance policies. Brent, in a previous episode, we were talking about some of the either mistakes other investors or homeowners make when it comes to picking the right policies and even understanding them, right? Also, some of the most important items in the policies that they tend to overlook because, of course, most people just pay for the policy and assume everything is covered, right? We did touch on that. On this episode, I want to talk about renovation. It's a huge topic, right? A prime example, I have a client who wants to buy a 5-bedroom home. He is planning on expanding that to either a 8 or 10 bedrooms. In this scenario, will their initial policy when they purchase the 5-bedroom home cover them, one, during the renovation period, two, when they are done expanding it to the 8 or the 10 bedrooms?
Yeah, no, that's a great question. So renovation wise, definitely won't have coverage moving from a 5 bedroom to a 10 bedroom because I'm
Okay.
sure they're reconstructing walls, knocking down
Yes.
walls, and
Yes.
having contractors in there doing it
Yep.
themselves. So with that being said, you definitely need to get some kind of builder's risk policy or home under construction coverage
Okay.
via an endorsement to allow the insurance company to know that work's being done on your property as number one. Number two is going to be understanding that insurance companies have no idea what you're doing to your home. So if you don't tell them, they're not going to know unless they go
Right.
out there, inspect it, take a look at it. And typically they're not inspecting because they want to increase your replacement costs and make sure your bathrooms are all in order. They just want to
Right.
make sure that they can insure you. They want to make sure that you're well worth the risk, that your $2,000 premium compared to the $3,000 market is spot on with how risky your
Right.
property is, right? So they're not going to know unless you tell them. So if you don't give
Okay.
them a budget, if you don't give them those changes being made, your agent's not going to just assume that you did that when you bought the house. You got to let them know. So that's going to change your replacement costs of the home, right? You're going from a 5 bedroom to a 10 bedroom where we've got different sizes here. It costs more, it costs different costs. The blueprint's different, and the home policy doesn't have the correct data. And then
Right.
you go ahead and add a couple bathrooms in there too. If you have a total loss and you tell them, hey, these are the blueprints, you're not going to have enough coverage because
Mm-hmm.
if you're covering it for 500,000 and after the renovation, extension, whatever, ends up being 800,000, then you're only getting that 500,000. That's it. You're coming out of
Okay.
pocket as an investor for the extra 300,000. So if you're just going to ignore that, or most oftentimes, Patrick, it's ignorance, right? And just not knowing that you're
Yeah.
supposed to let people know this. And it's like, well,
Right.
why would I let my insurance company know so they can charge me more? It's just going to cost me as an investor more money. So why would I tell my insurance company that? And well, it literally is costing the investor a possible future $300,000 in equity.
Right.
Maybe the house doesn't cost that much, but at least they can get that same house back after a claim, or they don't have to come out of pocket for that additional
Mm-hmm.
300,000. So I think it's definitely huge to let your insurance company know and make those builder risk endorsements and update coverage for sure.
So from what I'm hearing, during the construction, they need which coverage again?
It can be like a builder's risk builder's risk coverage, or it can be like a home endorsement. Just
Okay.
something that lets the insurance carrier know that there's going to be changes being made to the home. And then
Okay.
after that's all done
Hmm.
and you finish the project, I would honestly just re-quote the whole thing, get a whole new policy, shop the market, look at other carrier options, because they unfortunately, like Cook County, for example, it doesn't translate that data to the assessor's page like Zillow, Redfin. They don't all get that data. So even when an
Right.
insurance agent is looking on a fix and flip, they just finished everything. Unless they put the roof renovation extension year in there,
Hmm.
I'm not going to know it unless I
No.
talk to the client.
Right.
There's no way I can find out unless I find a permit or so. At
Hmm.
the same time, if it's not a fix and flip and they're not renovating it to sell it, then I'm never going to know. So that's
Right.
definitely a huge point there.
So we've talked about someone making a big upgrade, right? Or a huge upgrade. What about those individuals that want to build custom homes or luxury homes from scratch? Let's say I've acquired the land, right? What coverage should I get first for the land, for the building, the actual house, and maybe after that, what coverage will I get? Can I get one coverage that will cover me from the land all the way to when the house is done?
So, depending on your home insurance carrier,
Okay.
when you purchase land, typically your home insurance extends your home insurance liability, right? Your 300
Okay.
or 500,000 typically
Mhm.
extends to that vacant land. Now you'll have that 300, $500,000 in liability on that vacant land that's just a plot or a parcel. Now, when you break ground and you start digging a hole for that basement or digging a hole for that foundation, whether it's a slab, crawl space, whatever, you're going to need that builder's risk policy. And that builder's risk policy is to take you from ground break to a completion. I'm talking about
Okay.
no more work needing to be done except dusting off the marble counters and vacuuming the carpet, right? So typically, average home builds, I would say, are probably going to be that year or that annual builder's risk policy to that year and a half builder's risk policy to get you to completion and a finish date. And then
Okay.
at that point, if you're an investor or building it yourself, you might turn that 203K loan or whatever
Hmm.
loan you're using to make it and refinance, and I could be wrong on that, to make it a home, the
Okay.
home loan itself. I don't know too
Right.
much about the loan section, but you would need to make a switch in the insurance section to go from builder's risk to a homeowner's policy if you're going to live in it,
Okay.
or if you're going to rent it, make it into a dwelling policy or landlord policy.
I need clarification on something right quick. We are
Yeah.
going back to the upgrade that we discussed earlier. So let's say I have a landlord policy for the 5 bedrooms. Let's start with that. And I want to expand it to the 8 bedrooms, right? So my initial policy on the day that I close on that property is going to be a landlord policy, right? Then the day that I get the permit approved and the contractors get on the property to start the work, do I add that home improvement policy? I keep forgetting the name.
Builder's risk, home improvement. That's all
The
the same.
builder's risk, do I add it on top of the landlord policy or that replaces the landlord policy?
It would replace the
Okay.
landlord policy.
Okay.
And if you're doing that kind of extensive work to a home, get those tenants out of there. This is not being an occupied
Right.
renovation. And the reason I say that too is a multi-units in the city, Cook County, right? You're renovating one and someone else is living in the other. Typically doesn't go too well when you get a builder's risk policy because things can happen, right? I
Oh,
mean,
yeah.
tripping flooring, they're breaking drywall, homes. There's so many things I don't even want to go into, but that home.
See, I get it. Why? Because as I own a property, a multi-family in the city, And I've had to go through that experience, right? And sometimes it's not necessarily the fault of the investor or the owner. It's just that the tenants makes it very difficult. And as you and I know, Cook County is one of the toughest counties to deal with when it comes to being a landlord. So I'm going to leave it at that. So how about house hacking? We've heard when you look on YouTube, everywhere you go, oh, house hacking, that's the best way to start your investment, especially if you don't have enough money to start, right? And you don't have enough money to buy your primary residence and also an investment property, you can start with house hacking, right? So I want to touch on house hacking. What kind of policy are we looking at? Let's say I buy a duplex. I'm living in one, and the other unit I'm going to rent it out. Is it going to be a landlord policy or a primary residence policy?
Yeah, no, great question. 1,000% going to be an owner-occupied homeowner policy. So whether it's 2 units, 3 units, 4 units, I won't talk about anything 4 units plus because that's all commercial, but
Right.
most of them are going to be homeowners policies. Other than a couple of carriers actually let you write a landlord policy that is owner-occupied. There are a couple policy differences in language that I work with on my end with underwriters and stuff, but it's going to be a homeowner's policy with
Okay.
tenants that will be labeled rating factor of being a multi-unit, but it will provide you that liability and other stuff as a homeowner's policy.
So let's say it's a 2 unit, and I decide to build, as in Chicago, depending on the plot of land. If you have enough space, that's what I'm talking about, Cook County within the
Yeah.
city. If you have enough land, you can probably build another structure on that land, right? So
Mhm.
let's say, for instance, I bought a 2 unit. I have enough land at the back to build maybe a 1 unit or 2 unit coach house. How is that going to affect my current policy?
Great question. As long as the address stays the same and it's the same parcel, we're looking good.
Mhm.
As long as the primary property, the bigger unit, is the one being lived in by the owner, then we can classify most oftentimes, depending on underwriters and what they decide, but other structures coverage. So you may have to list it on a policy and as another 1 or 2 units, or
Okay.
you can just speak with the underwriters and typically increase your other structures coverage by quite a bit. And the way I do that, for example, is what we have is called a replacement cost estimator, right? It takes and analyzes a property, bedrooms, square footage, stories, all that fun stuff. I can go into details, but to get a good estimate on that, so then we can have that dwelling coverage be the top coverage, and then the other structures obviously would be lower because it's a smaller building. Will be an increase in other structures coverage, but it would cause probably a decent size increase in your policy cost, but you're paying accordingly, right? You're making rent off that property. There's
Right.
more risk on that property, that kind of thing.
So to understand what you just said, my initial 2 unit coverage, as long as that is the main house and the address is not going to change, it's much easier that way. To the additional structures that are going to be built on that plot of land, I'm going to need additional coverage for that structure, but the insurance company is going to look at each unit and quote per that unit, right? And not just the entire structure. Is that
It
what I'm
would
hearing?
No, so it would be like if you built a 2 unit on an already
Mm-hmm.
existing plot of land that had a 2 unit on it, so two
Mm-hmm.
different structures, I would calculate, and most agents should calculate that second mother-in-law suite or coach house, whatever you want to call
Mm-hmm.
it. I would quote that whole structure in terms of an RC. I would, which is the replacement cost estimator. I would not quote it as a separate policy or quote each unit as a different replacement. That would
Okay.
just be the addition to your already existing other structure. You'll have a
Okay.
base coverage and just add it on.
I get it now. How about let's go back to, I guess it really doesn't matter, right? So the material that I'm using for the rehab, right? Let's say I imported these marbles or these tiles from Italy, very expensive. How is that going to affect my coverage? Am I going to get the same basic coverage for maybe a cheaper or a mid-tier, a mid-cost material? And
So,
in case of anything, will even that be covered?
so let your insurance company know that to
Okay.
start off. As soon, and I know you asked the question about house hacking and 500,000 to a $2 million home. The price is not all in location. Can be, right?
Mhm.
Moving from your next city, can be
Right.
more expensive for every square foot. But you have to realize a bigger home, a more expensive home is
Hmm.
going to typically be an upgrade in your daily life. Like you're going to be going
Yes.
from birch
Yep.
doors to a
Yep.
hard mahogany carved wood. You're going to be
Yep.
going from no crown molding,
Yep.
like floor to ceiling, my man. Like
Yep.
you wouldn't believe if I opened up a replacement cost estimator in front of you, you'd be like, oh, they literally have everything in this estimator. They do,
Okay.
right? And when I'm calculating replacement costs, I'm going through that home with a fine tooth comb, right? We're looking, is it vinyl, the flooring, laminate?
Yep.
And I'll ask the client too, like you have imported from Italy because your last agent put your home as a replacement cost of 3 million when it's only 1.5 million. So what's going
Yeah.
on here? Um,
Right.
but the replacement cost and property value don't always equal out, and it's
Okay.
to see, some are overinsured, some are underinsured, and I would hate to see that Italy marble underinsured.
And it also leads to depreciation, right? We've had this conversation before.
Hmm.
If anything happens and there is a claim for replacement, in this case, you are going to look at the current market value and then, accordingly. So for
Hmm.
me, I think it makes sense to your point, to let your know that, hey, this is the quality of the materials that I'm using in my home. That way, to your point, I will not be underinsured. I want to switch gears for a second. Let's talk about business owners and investors own multiple properties. We're talking about a portfolio, right? Um, what strategy would you recommend for high earning professionals whose primary residence and I guess multiple investments, even in maybe including vacation home? Um, should they consolidate or diversify their policies?
Yeah, I just talked to you about this the other day too, on when we were talking about your other
Yeah.
client. But
Right.
man, I would recommend one thing to the investor who's just starting out or the investor who is deep within the process and owns five of them. One's an Airbnb, one's a long-term rental, one's a
Mm-hmm.
vacation home, one they're renting out to their son
Mm-hmm.
or condo in the
Yeah.
city, right? Set it up in an LLC.
Okay.
Please, like, or to recommend anything, I would set things up in the LLC or a trust or something like that because, well, first off, I'm not a real estate attorney, but all I know is when an in, somebody, right? It's going to be the name or title on the home, or it's going to be the name on the insurance policy. But when you have that LLC set up, you have an LLC bank account, right? That the tenant's money is coming into, that
Mm-hmm.
we're coming out, depreciation, taxes, right? That's all different. But now when you get an LLC in a name and that tenant or the mailman slips and falls going up to those stairs, they're going after the LLC and its
Right.
equity and its,
Okay.
but when
Mm-hmm.
you're a landlord and you own properties, you're affluent or just starting off, you know, come after you when it's in your name. Like
Okay.
as you exceed that liability of that 100, 300, or 500,000 as the investor, I mean, it's coming out of your bank account. And then you have to wait on the lawsuit and the charges from legal fees And then you might be paying a portion, 15% of every one of your checks to pay for someone's medical bills or to pay
Right.
for the lawsuit because, you know, a doctor was staying at your Airbnb and, something happened where it caused them to lose, their hand, right? Like
Right.
that's a serious equation. I mean, me and Patrick go golfing, for instance, and we
Mm-hmm.
don't have an umbrella policy, and we hit a golf ball and it hits a doctor in the head or, affluent in the head that's going to have high earnings. Like we're that
Yep.
$500,000 is gone,
Yeah.
out of a finger. So that's what I'm trying to relate and use as a metaphor for your
Mm-hmm.
rental properties. Is now that you have 5 of them, it's a bigger exposure. It's not just one property. They're coming after everything. And as soon as they know you own 5 to 10 properties, as soon as they know you're driving a Lamborghini or driving a Plaid, they know who they're coming after for the
Yeah.
money.
Yep.
For renters too. Like just you don't have that much or, don't that much, don't think people have more or less than you. Like people are still trying to get money where they can. And I'm not
Oh yeah.
saying everyone's sue happy, but just because you don't own anything and it from college, they'll still come after you. So
Mm-hmm.
that's my message to business owned multi-property owners and investors is to get the liability off your back as much as you
Mm-hmm.
can and put it on an LLC or
Okay.
get the highest price policy you can for an umbrella. And I'm not
Okay.
talking about highest price, but like if you can get a $5
Mm-hmm.
million umbrella, don't just settle for the $1 million umbrella.
Okay. So what I'm hearing, the options are get an LLC if it's possible, probably your primary residence, or a trust that can, those liabilities, right? So meaning
Mm-hmm.
you can put your primary residence and all your investment properties under that trust. From where I'm coming from and what I'm seeing, right? Let's go with the trust. If I have before we do that, or we can do an umbrella, right? A higher dollar amount for that umbrella policy that should cover everything, right? Sitting on top of all of that.
Yeah, either
Right.
or. Yeah.
I do have a question about the in this case, if everything is in the trust, the policy is just going to be for the trust, right? Not
The would be in the trust's name with the
right.
designee or an additional insured, whoever owns that trust.
Okay.
Yeah.
Okay. Thank you so much, Brent. I really appreciate your time and also sharing this invaluable knowledge and expertise with me and my listener or viewer. How can we get a hold of you if we have more questions or want to do business with you?
For sure, send me a text or give me a call at 312-519-5224. Or if you would like to book a meeting, I can send over Patrick my calendar for home and auto, life, pet insurance, whatever you want to talk about. You can book a meeting with me, or my email is my first dot last name right there at Comparion Insurance, and that's Comparion or comparison without an S. So COMPARION insurance.com.
Thank you.
Yes, absolutely.